Welcome back to Trading Hour. Well, some sobering news on the screen. We have the AMFI data, or the mutual fund data. This is for the month of March, which is the last month of FY25. And on account of the significant volatility that we saw in the equity indices, there's been a clear moderation as far as flows are concerned. We are seeing moderation across all of the key fund launches. So if you're looking at the net equity inflow, that's cooled off significantly at a little over 25,000 crore versus over 29,241 crore. This is on a month-on-month basis that we are seeing the moderation. The total AUM at 65.74 lakh crore versus 64.73. So there's been an uptick as far as the AUM is concerned, but that takes into account all of the fund categories. Large cap fund inflow has cooled off significantly, close to 2,480 crore versus around 2,800 crore on a month-on-month basis. So again, significant moderation over there. Net equity inflow, like we just mentioned, that's cooled off. Even the mid-cap and small-cap inflows have cooled off. Reema, this is something that we were anticipating, given the fact that in this particular month, the equity markets had cooled off quite significantly. And generally, we see when there is a significant correction as far as markets are concerned, you do see a moderation of flows. And this is something. What will be most important to watch out for will be the SIP number. That will come out a little later on the call.
Indeed. So these are the numbers as of now. The total equity inflow has come in at about 25,000 crore rupees, lower than the 29,000 crore in the month of Feb, which had already seen a correction of 25% compared to the high of about 40,000 in the month of January. So for 2 consecutive months, we have seen the total equity inflows dip. It was about 40,000 in the month of December and January. It dropped to 29,000 in the month of February, and it's further come down by 15% in the month of March. February anyway has lower days. Plus, we've seen the market, correct significantly. In March, markets had rebounded. And yet you can see, the equity inflows. But there was so much uncertainty surrounding Trump tariffs. You didn't know which way it's going. Plus, it's year-end. You could have a lot of tax adjustments that you would have liked to do as well. Large caps have seen a bit of a drop. Mid caps have been stable month on month. Small caps have seen a pickup in terms of the inflows. Suranjana Borthakur of Mirae Asset Investment Managers is now with us to react to the numbers. Thank you, Suranjana. Thank you for joining in. Give us your initial take. Is it a bit disappointing or is it par for the course?
Hi, good afternoon. I think if you see in terms of the numbers, it's not a very significant drop, I would say. I think the volatility in the market has been quite dramatic. I would say, in the last month also, if you see, there had been a lot of volatility through the market. But if you see in terms of the total flows, like you mentioned, I think from 40,000 about 2 months back, it had already dropped to about 29,000. But now a 25,000 number is, I would say, not a very significant drop. What is good to see is, I think, while large cap category, there has been a little bit of a drop. I think there continues to be inflows in the small cap category. I would think hopefully the investors are investing for the long term and not taking a call on near-term returns. I think also the fact that the hybrid flows have, I think, dropped quite significantly. That is what is a little worrying, because from 6,800 to somewhere around 940 crores or so, which is a large drop, I would say. In fact, in these volatile markets, if we see, it is actually best to stay invested in also hybrid categories, because they would help investors to ride these waves. Hybrid categories within hybrid, there are a lot of options, but I think it gives an opportunity to be able to manage the emotions of investors also, because as movement of market happens, I think changes within the different asset classes happens at the fund level. Therefore, even the taxation, is very limited to the investor. It is actually at the fund side. So which is where I think that's where maybe the concern is more. The equity, I don't see a very large drop. Looking at the scenario in the market, I think looking at what has been happening in the last few days also, there will be some amount of, impact on the inflows, and which is what I get to see here.
Thanks so much for that, Suranjana. Well, we are also joined by Anthony Heredia, MD and CEO of Mahindra Manulife Mutual Fund. Thank you so much, Anthony, for joining us. What is your first take as far as the month of March is concerned? is the moderation in inflow along expected lines? Any one-off factors? And what is the typical year-end impact that we see on ULIP flows?
Hi. No, so it's not a surprise. That's my first comment. Having said that, I think if you read beyond the numbers, I see a couple of things. One, I think clearly investor preferences are moving towards large cap. I don't see it only in context of large cap fund inflows. If you add up the flows into flexi, multi, large and mid and large, that's about 55 to 60% of the net flows, right? So I haven't seen that as a trend for close to, I would say, 18 months now. So to me, investors are clearly biasing to some degree towards large cap, which I don't think is a bad thing given relative valuations. Two, the fancy for sectoral and thematic clearly seems to have died. I see the net flow numbers here reflecting that. Three, which is a bit of a surprise to me, if we are talking about investors being a little wary, I find it surprising that we've seen net outflows in the equity savings category, which is the one hybrid category with the least net equity exposure. You would think that if people were wary on equity savings would get relatively more money than aggressive hybrid or multi-asset, but that doesn't seem to be the case. So that's the one data point that I find a bit puzzling, but otherwise, I don't think we would be too concerned with the flows. It's on expected lines. The fact that people are choosing more diversified, large cap tilted portfolios is again not a surprise. And I would expect this kind of a flow situation to remain. I am actually very encouraged by the fact that we continue to see close to 26,000 crores in SIPs continuing in the month of March. I think it's a reflection of the maturity of the retail investor. And that's, I think, my biggest source of encouragement. So that would be my initial comments.
Can you give us some indication, Anthony, of what the first 10 days of April have been like? We've seen so much yo-yo, tariffs on, tariffs off. What have you, at your fund, at Mahindra Manulife, what has been the behavior of retail investors now looking at April?
So again, surprising to me, slightly better than March. The last few times we saw sharp drops in the market on a day basis, for the first time I saw investors not necessarily coming in and buying in droves. At least that was my experience in the last 6 months, and I was a little perturbed by that. But for example, on April 3rd, for us, at least was our best inflow day for perhaps the last 5 months. It's kind of tapered off, but to me, the first 10 days of April, both from a net flow perspective and an SIP perspective, is actually marginally better than the month of March. I'll say this though. You've got to caveat it for the fact that SIP flows, which tend to be a significant portion, come much more in the first 10 days of a month. So my expectation is at this juncture, April looks to be similar to March is my read.
Okay, Anthony, so April looking very similar to March. So again, maybe a month of moderation is what we could see. Suranjana, what we are now used to is seeing monthly SIP inflows in excess of 25,000 crore. What would be the number you would be looking for, especially if you take into account the kind of volatility that you're seeing? Above what number will there be no panic? And do you feel that, especially with the kind of environment that we've seen, sectoral thematic funds are definitely behind us?
Very rightly said. I think I also agree with Anthony, the fact that there was this whole craze around sectoral products and where, a lot of new products were getting launched. And last month, we actually saw that in spite of like 7 NFOs that happened, the inflow in this category had gone down significantly. I think somewhere around 2,800 crores happened in this category. But so which is through the NFO route. So I think that craze for a new product and a differentiated product is somewhere people are realizing that the volatility in the market does not play well when you beef up too much of volatile products as a core part of your portfolio. I think it is also the SIP flows. If you look at it, I think if it remains above 25,000, I think last month there was a 400 crore drop that happened in the book, but that was largely to do with February being a shorter month. I think the fact that this month is a complete month, possibly the number above 25,000 would be okay number to look at. And I think if we continue to see this trend, we see a significant upside from about a couple of years ago. So which is where even if you look at 1 year ago, the numbers, I mean, I think they have come up very strongly. This shows the long-term commitment of the retail investor. And like Anthony was mentioning, I think even in this month, if we see in terms of corrections, one of the things which actually shows us also the maturity of investors is, I think, on very volatile days, we see our ETF trading going up very significantly. So whenever there is a large drop in the market, we see quite a significant upside in terms of volumes that are traded. So which is where I think, and this is not only to do with the major benchmark products, it is also to do with differentiated products. So I think the buying on dips is something that is being taken a little more seriously, and any investor who has a long-term commitment is willing to stay the entire ride, is what we assume.
Thank you very much, both of you, for joining in. We need to get into a very short break. On the other side, we're going to address another important issue. We'll get an update on the microfinance industry. Alok Misra will join in on the other side to gauge what FY26 looks like and whether we are seeing any improvement.